Mutual fund, and he joins us now to discuss the way forward for the market and what really we could see from here. Sunil, thanks for joining us as always. This is Pavitra. You know, ever since the earnings started, specifically what we've seen with IT, the market seems to have just paused. There's really not much going on. How do you think it's going to move from here as we do start getting more and moving out just from the IT earnings as well?
See, basically, this is going to be a nervous period for the market. So, one, because of the earnings season. Second, it's a summer, there's a heat wave. There was an anticipation that consumer discretionary, consumer durables would see a summer pickup. So the commentary around that coming in when the earnings season comes, people naturally are questioned about how is the current quarter looking. And I think that data is important. What do the companies feel about demand in consumer this one? Then you have the El Nino impact. I know SkyMet and India Met have given slightly varying opinion on the monsoon this year, but the El Nino effect is again, and you mentioned about rice prices rising worldwide. So I think that is again a cause of nervousness for the markets from perspective. So I would say this quarter is generally going to be this way, not much movement. On IT specifically, since you mentioned, see, IT, I would say, is still got room to correct in my perspective, because the whole COVID level, when the IT went through a kind of safety to growth up valuation move, I think has not entirely gone away. And because the US kept showing some signs of recovery, there was a hold on the IT pack saying they might recover. But I think the banking crisis, and BFSI is a big buyer of IT services. And the banking crisis, if that means that there's going to be less ordering, the US recession signs as they come through, credit defaults are beginning to rise slowly in the US. So I think the nervousness around the IT pack in terms of business growth for the year will need a lot more clarity, and maybe the earnings season commentary will give us that.
Sunil, hi, good morning. Surabhi, this side. Let's talk a little more about the sector that you represent, financial services, and it's early days. We just started hearing from companies, for instance, ICICI Lombard. I mean, there's some hiccups there in terms of business growth slowing down, not as robust as perhaps what was anticipated earlier. And again, even for mutual funds, I mean, we all know the factors too well, a lot of regulation, taxation changing on the debt side. So specifically yes, for insurers, mutual funds, and let me throw in wealth managers as well, the listed ones at least. What's the house call, and how are you looking at the non-lending part of financial services?
So I think, overall, the trend in terms of growth of business for both insurance, asset management and wealth management, all the three sectors, we see that India's per capita GDP, we expect it to double by the end of the decade. And we expect that while a certain amount of consumption will shift, let's say from consumer staples to discretionary, the net consumer surplus in their hand is definitely going to increase. And to the extent that we expect rate cuts happening from the second half of the year, we expect interest rates from banks and fixed income. All of these three are very heavily regulated. And I think India as a regulation, right, we are trying to be among the best in the world. So a lot of practices that prevail in the developed countries are being brought in here from an investor protection angle, from a market depth angle. To that extent, the cost pressure, right? Because it's also passives coming in play. In asset managers, there are passives. On the wealth side, stockbroking, there's a lot of passives coming in. So generally, there's going to be a pressure on cost for this. So you have an expanding basket. You have the regulatory overhang, like the 5 lakh insurance premium taxation, like the regulations that came in terms of SEBI is talking about TRs and all of that. So there is going to be a balance between the pie itself increasing and the margins reducing. So overall, on an EPS growth perspective, I think it should be stable over the medium term. But in the short run, while that growth picks up, there would be margin pressures. So you will see a slightly volatile a movement in their EPS and the valuations consequently. But from a medium term, if you are looking at it from a 3 to 5 year perspective, I think these are excellent sectors to invest in, given the overall scenario that consumer surpluses in India are going to go up, savings per capita is going to go up.
Sunil, in your many years of experience, decades of experience, you have seen many cycles of technology, the up cycle and the down cycle. Suddenly, there are renewed concerns on the technology spend, what the outlook for the Indian IT companies will be, and even the management commentary has changed overnight. In the month of January, companies were singing a very different tune compared to what they are right now. How would you classify the current environment, and is the weakness that we are seeing, because most IT names have corrected about 5-10%, some of them even more than that in the last couple of days, doesn't make it an attractive buying opportunity? Or would you wait it out?
Yeah, so I would say between January and now, what happened was a banking crisis, right? And I mentioned in my earlier chat. So the Silicon Valley crisis and the Credit Suisse crisis, and to see whether there's any ripple effect, means each of these banks is going to focus more on getting their asset liability, their risk management practices better. So they're less likely to go on an expansion on the IT framework. So I do see that business for IT companies from the BFSI sector would be under pressure, right? Number one. So as a result of which is why the commentary, I think, has been changing. Number two. Number three factor is that I still believe that the US is still not clearly coming out of a recession path. So IT development, right, has got a correlation on two aspects, right? One is it's a large part of the user's cost base. So in a recession, they will tend to try to reduce the cost. So they will go and renegotiate with the Indian companies to bring down cost, number one. Number two is that in terms of expansionary IT, the Internet of Things, the artificial intelligence, all of those new things which we already talked in COVID will be on slightly on a hold. But the third aspect here is that while I'm overall as a pack, I'm just neutral on the IT space, there are company specific, because in this whole rush to drive down costs, right? One company could go and outbid another. And I would still see individual IT companies coming out winners at the cost of others. So it's a very highly stock specific situation at this stage. Some of the IT companies have corrected to reasonable values where we would like to accumulate them, but not all of the IT pack. So it's I would say both a wait and watch and a stock specific outlook at this point on IT, but definitely it's not a blind IT buy at this point.
Okay, got that. Sunil, how are you looking at the entire real estate space? Ever since we got that pause from the Reserve Bank, the sector has rallied, some 11-12%. Would you look at these stocks? Do you think it's a good time considering, what's going on with interest rates as well?
Yeah, I think so. Especially if you look at the high end, a lot of high end projects are being launched and being sold out within days. So clearly at the HNI levels, everybody is looking at a second or a third home outside of city in a larger space where they're looking to chill out and relax over the weekend. So the additional home buying, I think, has picked up. And I think the real estate sector, you're seeing rentals sharply shoot up. So as a result of it, as an investment also from a HNI's perspective, real estate is suddenly looking attractive, because even if you put in the cost of borrowing and take the tax break into it and look at the delta between the rental yield and the net cost of your loan on this, I think that's down to about 2.5 to 3%. So which means if you're just coming in 2.5 to 3% monthly cash flows, you're able to buy another asset and the rental yields are going to go up. So I see that real estate is a good pack, because the other point that I mentioned, that consumer surplus is going to be higher. So savings will be higher. One aspect of savings, India likes to save in physical assets by the way of real estate. So one portion of that savings I do expect to get reallocated away from bank deposits into real estate, because to me the rental yield then makes it a very attractive regular return compared to a bank deposit or a company fixed deposit. So that's another avenue where I see savings being diverted to the real estate pack. And I think there are a lot of launches, for example, in the alternate space, right? There are a lot of AIFs which are being launched in the real estate. Our company also has got 3 or 4 of them, and they are seeing great demand. And so developers there are eager to take loans to grow this business. So I think we are reasonably bullish on the overall real estate pack. Of course, remember that is a very, very city oriented, in the sense specific cities will see oversupply, there you go easy, other cities are growing rapidly. So I would say that you can't apply the rule, just as I said for IT, it's not a blind thing across. We've got to look at local demand supply, and the IT sector is a big buyer of real estate. So when I said about the IT sector, there'll be some amount of impact of that. If the salaries are not going to go up so much, then maybe the demand from that slightly cools down. So very IT-centric cities, real estate would be a very different perspective from another business like a Mumbai, which is a financial services place. So I think it's a very city-specific play, but overall, given the scenario of a doubling of per capita GDP, we think that real estate will be one of the beneficiaries. And the government, of course, thanks to the employment generation capacity of the construction real estate business, is going to continue to support it through SOPs, through various levels.
Okay, all right. Sunil, good listening in to you. Thank you for joining us on the show today, and we look forward to our next conversation. Well, the markets are absolutely quiet, 13 points lower on the Nifty. Let's take a quick break. We'll find out what's happening in the world of commodities. Manisha Gupta will join in with the latest.